Hey traders, Raghee here, and in this video we're going to talk about why next week I'm looking for more upside follow through in the markets. Now, it doesn't mean that it's just going to be another grind higher like today, but let's review some of the levels that we discussed in yesterday's video and why even today, based on the way that we shifted directional bias to the long side, for example, we'll dive into the S&P here. Remember that one of the important levels we talked about in yesterday's video was the point of control right here, this white line. And this is for the entire year. This is the point of control for 2020. We bounced off of right there. Now, when we bounce off a point of control, if that was the justification for why I wanted to be long yesterday, that's not going to change today. In fact, there's a couple of things that are going to make me even more bullish as far as levels that we are above. So first of all, we're still above the point of control. We took out the high from yesterday's session. Getting above that level, which was just above 3250 as well, but getting above that level completes a minor low break, an aggressive minor low break. So today was, again, just another bullish day where I was very uninterested in any gap fades. It did not meet the criteria for what I like for a higher probability gap fade, and yet the bullish directional bias was still very much in play from yesterday. Well, the way that we seem to be going into the close, we still have another 30 minutes before the close, but unless the next 30 minutes brings some sort of dramatic move to the downside, I'm going to be looking for a little bit more strength. Now realize we can stay within a choppy market and get to, or even just about to 3,400, which would put us in approximately a 200-point chop. This is not an uptrend, it's a 200-point chop, which could be extended to the value area high for the month and even the near-term highs. But we don't know ultimately where the retest for the chop is going to be before this market decides it wants to move back down lower and remain in a range, remain in a distribution range. But I'm not going to be bearish until we find which one of those levels ultimately, very likely, that we retest. And I'm not going to be bearish until we get up to about a +2 standard deviation, which tells me at this point we've gotten a little too far away from the +1 and even the mean, which we tested back in here in June. All right, so I'm going to be going into next week bullish. A little bit more follow through, not bullish in terms of a trend, but bullish in terms of a bounce from oversold levels. I'll see you next week.